Okay, great. So let's talk about these installments. How do large companies pretty much pay? So pretty much a large company is one which has augmented profits greater than the profit threshold, depending on, of course, associated companies, and also in terms of apportioning the CAP, but we'll come to that. Um, a number of just exceptions. You will not have to pay your taxes by installments if your tax liability is less than 10,000, and if, oh sorry, or pretty big one there, sorry, or if it was not large in the previous CAP and your augmented profits are less than 10 million in this CAP. So again, it's just an exception. So what you'll see in questions typically is they'll always give you or highlight the fact that in the previous CAP it was a large company. So if it wasn't large, then you're exempt in the previous, and your augmented profits are less than 10 million. So because of course, right, 10 million is greater than 1.5. So in effect, if you weren't large and then suddenly you were 5 million this year, technically you should, but you don't, because in the previous period you weren't. You weren't. So again, this 10 million, of course, a number of things is scaled down for short CAP. So it's all being quite fiddly, but in the end, it's just little rules divided by the related 51 group companies at the end of the previous CAP. So it's just watching out. But again, like I say, it's just, you'll just do them and see what the issues are. So the grail here is this kind of, okay, what's the start of your CAP, and then we take month 7. You just need to remember that there's little rules: 7, 10, 13, and 16, and we pay on the 14th day. And in a way, you kind of have to, if you've done any of this, what you notice is that you're currently kind of estimating based on your current year tax liability at that date. So you're always constantly trying to fix things and measure things to get to the right installments as you have things that, as you see these changes occur, because you see you're starting to pay within your chargeable accounting period. So you have time to keep observing and making changes. So let's see this first example here. Here we are at the 31st of this. So we have here at the 31st of March, Nectarine owns 60% of Orange, who owns 60% of Peach. So 60 times 60 is 36. So there is no relationship between Peach and Nectarine. So they're only Nectarine and Orange. So we have two associated companies. So in effect, their threshold goes from 1.5, divide that by 2, to 750,000. That's the threshold. Okay, so in the year ending this 31st of March 2018, Nectarine has taxable total profits of 1 million, so it must therefore pay installmentally. Well, sorry, forgive me. Yes, it would do that, but this is really to signal to you that this was a large company in 2018. That's the big point here. That's why they're telling you this. And then in the year here, it is 800,000. So receive no dividends. We have to pay 800,000. I see that my chargeable accounting period starts on the 1st of April. 2018. So I need to just get 7 months from there, and then 10 months, and then 13 months, and then 16 months, pretty much. So the question is 7 months from here: April, May, June, July, August, September, October. So I'm 7 months, and I go 14th of that month, which is 14th of October, 18, and then October, November, December, January. Then I go 14th of January, 19, February, March, April, 14th of April, 19, May, June, July, 14th of July, 19. And then I will pay, these are the dates that I will pay this, if you like, pay this in quarterly installments, if you like. And that's it for example 6. So that's how we decide what's going on. Now, then let's look at this one again. Oops, sorry. Example 6 is pretty much asking us to do exactly the same thing. So it says here that exceeds the Quince Limited exceeds the augmented profit limit for corporation tax payment dates and makes up accounts to the 31st of December each year, and state the due dates for the payment for the year end. So year end is 31st of December I start within my year. This is the key point. So within my year, so it's a 12-month period. So that was 1st of Jan. So I'm going 7 months. So this is a nice one. I know the 7 months takes me straight away to the 14th of July, 18, and then I have the 14th month 10 of October, 18, and then I have 13, which is 14th of January, 19, and then I have 14th of April, 2019. Those are the due dates. Cool, and that's how we deal with dates for companies, large companies. Remember, small companies, 9 months, 1 day, post the end of the chargeable accounting period. Cool, great stuff, and I'll see you in the next video.